Welcome to my channel again. In today's video, it's not going to be the normal chart analysis or trade recap. I just feel like today's video should be about conversation or about sharing my experience, which is related to psychology. So in this video, we are going to be discussing about the 5 things I completely cut out of my trading habits, and this changed everything for me. So though there are a lot of them, but I just list out these 5 things. These are my experience, and I feel like it's necessary for me to share it on my channel. So the first thing I did um, that shifts my mindset and also helped me to be at this point today is that I stopped blaming the market and I started accepting everything that happened in the market. See, the concept is as a newbie, you were being told that there's something called market manipulation, broker manipulation. Um, there are big boys in the market that want to take your money and all those things. Yeah, if that is true, fine. But for me, I discovered that those are part of the challenges you are going to face as a trader, and which I faced. So at some point, I had to think like this is not about other people, it's about me. Trading is your own personal journey. So I stopped blaming the market and I started what? I started accepting everything that happened in the market. For example, if you put your stop loss in a particular level, because all this thing happened to me, I'll put my stop loss in a particular level and probably market will sweep me out and later go in my direction. I'll be like, oh, this is market manipulation. But since I removed that idea, instead of me blaming the market, blaming the broker, blaming the spread or the swap or wherever, I started finding out or figuring out how I can systematically be placing my stop loss in a place that at least it will reduce me being stopped out, or maybe consider the time I will execute my trade or the window time that I will be trading. Because if as a swing trader, if the market is if you are holding trade overnight, there will be when market close and when markets open, there will be a lot of gap because the liquidity is kind of low by that time. So all those things is just an excuse. Trading, you don't need to blame anybody. Just accept all the things that come with it and move on. And when you accept that everything is on you, this will activate your brain by trying to figure out how you can maneuver the whole challenges that come with trading. So you should stop blaming the market for whatever things that happen to you. So that's one of the first thing I did. I changed my mindset by stop blaming the market and I accept the full responsibility of what happened because I noticed that that's going to keep me stuck in one place. So the point number two is I stopped um, thinking in a single trade. I started thinking in series of trade. See, one thing a lot of people don't know is what would definitely make anybody that is profitable in this market. It's not the chart, it's not the technical analysis, it's all about the mindset. So if you have a right mindset towards trading, then you find it easy. But if you have a wrong mindset as a foundation, it's definitely going to be difficult. So I stopped thinking in terms of single trade and rewire my brain to start thinking in terms of series of trade. So what do I mean by this? See, a lot of people believe that is that one single trade that will change their life. Most especially people that have a mentor that teach them, that tell them they can flip, they can turn $100 to $1 million or 100 to $10,000 and so on. Those mindsets is not the kind of mindset that can make you to be consistently profitable. So when I understand that during my study and my research, I discovered that this has to change. So I have to rewire my brain from thinking in terms of a single trade to in terms of series of trade. So, and that's what Douglas said when he's talking about you have to be thinking in terms of probability. That's how you can start thinking in terms of probability. For example, if you for me now, this is what I do when I stop that. I stop thinking in terms of that, but I say, okay, this is what I will do. I will execute my setup in the next 10 trade. So by doing that, if I take the first trade and it end up SL, take the second trade SL, I know that by the time I will execute the 10 trade, there's high tendency that I will become profitable. So for example, if your RR is 1 to 3 and you have, let's say you buy a Profem, for example, or you have an account that said, okay, your drawdown must not be more than 10%. All I do is to do what? Is to divide that 10% into 1% and said I'm executing this trade based on 10 trade, not based on single trade. So by that, it actually helps me to remove my attention from outcome driven to the process driven, because I know that single trade is not what is going to determine my outcome. So I just have to focus on executing correctly. So that helps me in a lot, and it removes the psychology of whether I'm going to win a trade or I'm going to lose a trade. So it stabilizes my emotion and puts me in control. So this is what is very, very is in fact is a key point for anybody that wants to be successful. You just have to stop thinking in one trade that this one strategy or this one setup that you will use to recover your loss or that will make you big or that will give you that breakthrough. There's nothing like that in trading. You have to start thinking in series of trade, 10 trade, 20 trade, 30 trade, 100 trade. So, and that's what will help you to understand that you have edge in the market. So the third thing I focus on or I stop doing is I stop focusing on win or loss. And it's related to the second thing I just mentioned and start focusing on the process. See, most people don't understand where they said follow the process, follow the process. A lot of people don't really grab it. They don't know what it means by following the process. And for you to be able to understand that, you first have to eliminate the mindset of win or loss. For every trade you are taking, your goal as a trader is not about win or loss. And that's what I did. I stopped thinking about win or loss because I discovered that it's not about whether I'm right or I'm wrong or I win or I lose. I can actually execute a bad trade and still win. And I can execute my trade according to my plan and still lose. So if you remove the win or loss mentality, say, okay, this trade, because you win, it's going to affect your next. Because when people win trade, it affects their behavior because they are they have this win and loss mentality, they are outcome driven. But I've discovered that for me to be consistently be in charge of my emotion, I have to remove win or loss attitude or mindset. So by removing that, it enables me to focus on my process, on executing. If I'm entering the trade now, I don't care whether this outcome is win or loss. What I care about is, am I executing this trade according to my plan? So if the answer is yes, I'm okay. If the answer is no, then that's not a good trade for me. And I still have it in a way that if I execute a trade and it's not according to my plan, then it's a bad trade for me. If I execute it, whether win or loss, if it's not against according to my plan, then that's not a good trade for me. So, and such trades are trade that I can't even put in my journal because it won't fit in. So you have to rewire your brain when you execute any trade. Forget about whether it's going to win or loss. Stop thinking whether it's going to win or loss. That's where markets tamper with your emotion and start driving you crazy. But if you focus on the process means focus on the rules and regulations you set for yourself, your trading plan. If you execute it according to your trading plan, it's already a win for you because you are reinforcing good trading habits. And good trading habit is exactly what's going to lead to profitability. So that's it for that point. And the fourth one is I stopped thinking in terms of the money value and I shift my attention to percentage. I discovered that thinking in terms of the money value, let's say you are handling $100,000 account and you are to risk maybe 1% or 2%, let's say 1%, and 1% is $1,000 and you are in a trade and maybe the trade is in your favor or maybe you had a loss. At the end of the day, if you put your head in, oh, I'm risking $1,000 on this trade, you will lost in that process because that $1,000 might be a lot of money to you. And every fluctuation in the market can actually affect your emotion. So let's say you even lose three trade back to back and you'll be like, I'm $3,000 down. That's a lot. And if you're not careful, if you are someone from Nigeria or a place that you can convert your money to your local currency, that might mean a lot to you. And before you know it, that will enter your emotion and start making some trading error. So those are the things I observe when I'm in the trade. I discover that if I start looking at my even my MT5 and I see that, oh, I'm in $5,000, I'm in $100 profit and so on, it starts affecting my emotion. And if I'm also losing and I see that, oh, I've lost 1,000, I've lost 1,000, it can also. So when I stop doing that, I just start thinking in terms of percentage. Okay, on this account, I'm risking 1%. If I lose whatever the figure the 1% amount to, is still 1%. It doesn't have any serious impact on my other on my account. So it means that if I lose three times, instead of thinking I've lost 3,000, I will just be thinking, okay, it's just 3%. And one win will cover up for my loss. So that actually helps me a lot and helps to stabilize my emotion. It makes me to be able to be in control of my emotion when I'm executing my trade. So the fifth one is also related is I stop having fluctuating risk. This is all about what do they call it? This is all about risk management. So I stop having fluctuating risk in percentage. I started having fixed risk. So what this means is that I stop risking different percentage. Because let's say I have $100,000 account and I risk 1% here, later I risk 0.5% here, I risk 2%. Those fluctuating in the percentage that I'm risking is based on my mood, not based on my system. Because if I have a trade that I'm confident on, my mood will trigger and it will ask me to risk more so that I will recover my loss or I will make more. And if I have a trade that I'm not really confident on, I feel not really confident on, my mood will tell me that I should reduce my risk. But the point is, market doesn't care about how you feel. It doesn't care about how I feel. So I find out that as long as I don't know which of the setup that is going to give me money, even following my rules to the fullest, some trades are there that this align with all my rules, but my feelings is telling me that I should not take it. So that's where a lot of people get confused. This thing match their rules, and because of they are so much into how they feel, they will hesitate by not taking that risk because they believe their feelings over their system. So this thing actually helps me to say, okay, if I have $100,000 account, all I'm risking is 1% on every trade, irrespective of how I feel. Whether the trade is high probability according to my feelings, whether it's low probability, whether so these two things come together. As long as I'm executing the trade according to my trading plan, irrespective of how I feel, it doesn't matter. All I need to do is to execute exact percentage that I need to risk, which is 1%. One of the things that this thing will do for me is to stabilize, is to make me to be able to calculate my probability outcome. Because if I'm risking 1% and I'm taking 10 trades, I know that if I lose 5 times, that's 5% drawdown. And if I win the rest 5 times, times 3R that I target, then that will be 15%. So 5 win, 5 loss, minus 5 that I lost, that will give me 10% profitability. So it's easy for me to calculate my PNL. But if I risk 2% here, I risk 1% here. What about if it's when I risk 1% that I'm going to win, and when I risk 2% is when I. So in order to eliminate those confusion, I stabilize my risk percentage and I make it 1% based on the type of the account or the size of the account I'm trading. So that helps me a lot to stop worrying about maybe the trade will win, maybe I'm going to make money or I'm not going to. If it wins, I know what I'm making. If it lose, I know what I'm making. My focus is solely on executing that trade according to my plan, according to my playbook. So that's the point number 5. And let me make this the extra one because this is also what I struggle with for a very long time. And I think I should make it a bonus, which is the point 6. I discovered that at a point, the point states that I stopped taking trade, I can't journal. Most importantly, a lot of traders don't even journal. And I don't know how you want to be a successful and a professional trader and you don't journal. It took me time for me to come to that realization and make journal part of my process. So I discovered that there are some trades that I take and I can't journal it. So all I come to realize when I come to realization that this is not going to help me and it's not really helping me, I stopped taking trade that I can't journal. I started taking only trade I can journal. This happened in some months ago. I checked my journal after a month and I discovered that on my journal I'm profitable based on the trade I took. I was profitable. But when I checked to my MT5, I was on drawdown. So it means that there's something. So I tracked those records and I discovered that I was taking some trade along the line that I was not putting in my journal. Why? Because those trades do not really fit into my trading plan. But because I was using my mind and my emotion, I would just be like, okay, let me just take it. If this win will also be a plus, I'm confident. And at the end of the day, those are the type of trade that is robbing me of my profit. So when I discover that, I make a resolution that I'm definitely going to stop taking trades that I cannot put in my journal because my journal is to guide me to document how I take my trade, the process, the amount, the time, the risk, and the characteristics, the characteristics of that trade. Does it fit into my rules? So I have to check it in my journal in order to make sure that I'm actually trading according to my plan. So that was the last thing I did. And if you are also a trader and at this point you are still finding it difficult to journal, it's not flex, it's not anything. Journal is very, very, it's like you going to a football match and you don't have a formation. You just ask your player to go and play. You don't fix a formation, you don't give them their roles, they don't have a game plan. That's exactly what it means. Because journaling helps you to track when things is not working and when things is working. And if your system is working, for the example I made, my system was working, but I was not working because I was the one that was interfering with the system by taking trade that was not fit into my trading plan. So those are the 5 points I stopped doing, and this point actually helps me and transform my trading journey. I'm still learning. There are more points, there are more things I've learned in the process, and up to date, I will keep sharing it with you guys as time goes on. So bye for now. If you have any question, you can also drop it in the comment section. And don't forget to like, subscribe, and share.